The euro continues to gyrate in familiar range as the situation on the bailout of Spain remains uncertain. Reuters reported that the country is preparing to finally seek a sovereign bailout and things will crystallize in November. However, Finance Minister Luis de Guindos reiterated on Saturday that it's in no hurry to seek a bailout as there is much more optimism towards Spain than 3 or 4 months ago. On the other hand, European Central Bank Council member Joseph Bonici urged that even though the situation is less urgent, it's wise for Spain to explore the route of a bailout and not wait until they tested in the markets. The euro's recovery attempt late last week seemed to have lost momentum already, and would likely stay in recent range for the early part of this week. China's CPI eased to 1.9% year-on-year in September, down from 2% in August, as expected. PPI, on the other hand, unexpectedly dropped 3.6% year-on-year. Xu Lianzong, director of the Analysis and Prediction Office of the National Development and Reform Commission, predicted that the CPI was not likely to see a significant rebound for the remainder of the year. However, some analysts pointed to the fact that non-food inflation jumped to a 7-month high of 1.7% year-on-year, which was a sign of underlying price pressure and thus could tie the authorities' hands on easing. Also, some pointed out that the weakness in PPI is a sign of weak economic activities. Reported over the weekend, China's trade surplus widened to $27.67 billion in September, up from $26.7 billion in August. That also surpassed consensus of $22.4 billion. Exports rose by 9.9% year-on-year to a record monthly level of $186.4 billion. Imports also rose 2.4% year-on-year. While the data was satisfactory, there were criticism that the export number could merely be a one-time blip. That's more of the results of a combination of factors, including the recent appreciation of the euro, coinciding of the Mid-Autumn Festival and the Golden Week. Reservation on the data could also be seen as the Aussie, which is sensitive to China trades, couldn't rebound as the week opened. Fed Chairman Bernanke defended the Fed's quantitative easing by saying, "It is not at all clear that accommodative policies in advanced economies impose net costs on emerging market economies." Instead, Bernanke emphasized that the Fed's open-ended QE3 not only helps strengthen the U.S. economic recovery, but by boosting U.S. spending and growth, it has the effect of helping support the global economy as well. However, the view was not totally shared by central bankers of emerging economies. Russian Finance Minister Anton Siluanov said that, for now, this excess liquidity is not contributing to inflation, but it could happen at some point. People's Bank of China head Zhu Zichuan also urged that central banks should consider draining excessive liquidity injected into the market and eliminate inflationary pressure in the long term. Latest CFTC data saw euro net shorts build up again and rise to 72,300 contracts on October 9, up from 50,300 contracts a week ago. Sterling net long were down to 22,570 contracts, compared to the 2012 high of 30,100 contracts a week ago. Yen net long were relatively unchanged in range at 12,900 contracts. Australian dollar net longs dropped sharply for another week to 39,800, that compares to 89,600 contracts 2 weeks ago. Canadian dollar net longs also dropped slightly to 95,600 contracts. Elsewhere, UK Rightmove house prices rose 3.5% month-on-month in October. Australian home loans rose 1.8% in August. Japan industrial production was revised down 1.6% month-on-month in August. Swiss PPI will be featured in the European session. From the US, Empire State Manufacturing Index retail sales and business inventories will be released.